we are set up for an explosion. And that $380 silver is not a ridiculous price. People, when I say triple digit silver for years and years and years, I've been called a nut by a few people, mostly people sort of entrenched in the industry. But when you look at the fundamentals underlying silver, it is inevitable that this is not just a once in a lifetime opportunity, but a once in 16 lifetimes opportunity. Silver isn't just the new gold. Silver is better than gold.
In 2024, silver shattered a decade-long price ceiling, surging past $30 per ounce and capturing the attention of investors worldwide. By October, the metal had rallied an impressive 40%, outpacing even gold's strong performance. Prices peaked at $35 before stabilizing around $32 in mid-December. From historical charts revealing a once-in-16 lifetimes value gap to the looming short squeeze that could send silver soaring, every indicator points to the metal being significantly undervalued. Mike Maloney, author of Guide to Investing in Gold and Silver, has long predicted that triple-digit silver prices are on the horizon. He frequently emphasizes that whatever gold does, silver tends to do with 3 times the intensity, suggesting that silver's next move could be explosive. As 2025 approaches, the silver market faces mounting supply challenges. Over the past decade, total silver supply has declined, dropping from 1.07 billion ounces in 2010 to an estimated 1.03 billion ounces in 2024. Meanwhile, demand continues to outstrip production. Since 2021, the market has consistently faced supply deficits, with 2023 recording a staggering shortfall of 184.3 million ounces. This trend is expected to persist, as 2024 consumption is projected to reach 1.21 billion ounces, leaving a massive 182 million ounce deficit, a fundamental imbalance that could drive prices significantly higher. Maloney parallels the gold rush of 2011, when "We Buy Gold" signs appeared on street corners and businesses scrambled to acquire precious metals. He believes a similar frenzy could unfold in the silver market as prices drop. However, with stockpiles at historic lows, the price surge this time could be even more dramatic. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
But this one is very interesting because I've never seen silver in this light. Silver is usually referred to as either the poor man's gold, or it's referred to as something that has bigger potential gains, but has so much volatility that you have to have a stomach of stainless steel, not cast iron, stainless steel, titanium, to be able to ride the silver roller coaster, because the ups and downs, whatever gold does, silver does times 3. This is an interesting article because people are now looking at silver as not just this sort of leveraged play on gold or the potential upside, but also as this real safe haven, which is something I sort of, I was, there were a few people, I may have been one of the first to dub this the everything bubble. But then I quickly changed when I was writing my book to, well, it isn't the everything bubble. It's the almost everything bubble, because gold and silver are not in a bubble when you measure them against all the other real stuff in society. The lenders of last resort, when it comes to gold's price getting away, the world's central banks have a lot of gold that they're sitting on, and then they can lease it into the markets, and the bullion banks can then manipulate the price with all of the leased gold, because it's sort of phantom gold coming onto the market. Silver, that doesn't exist. The stockpiles are all gone. So, and then with the silver requires much higher spot prices before large recycling gets going. Yes, you have to put all of the machinery and everything into place. That's years worth of investment. There is going to be something called the big melt. It happened in 1979, 1980. Higher spot prices. But I'll tell you, what happens during a big melt when everybody rushes to see, you see those people during a gold spike back in 2011, all these businesses sprang up, "We buy gold," and people standing on the street with flipping signs around their head and stuff, "We buy gold." And it became really popular for a little while. But during a big melt, the spreads, they're sitting on so much inventory that it's going to take years for your scrap to actually get melted down, refined, and poured into a bar. And so the people sitting on that, what you can actually get as far as a percentage of the spot price during that rush when everybody wants to turn in all of their scrap, you can't get anything for it. You get maybe 30% of spot or something like that, because all of the people that are buying it, they're going to have to carry a futures contracts that are rolled over for years before that silver gets melted down, and there's a carry cost. So let's move on. I'm sorry I went off on that, but the big thing is there's no lender of last resort to control these price fluctuations. When silver gets out of control, it'll do a moonshot.
The increasing demand for silver in industrial applications, particularly in green technologies, is expected to be a major driver of price appreciation. Key data highlights silver's growing industrial role. By 2050, solar energy alone could consume approximately 85 to 98% of the world's current silver reserves. Silver's supply constraints and price volatility have led some investors to turn to the derivatives market for risk management. Silver options trading volumes at CME Group hit a record high of 18,027 contracts in the past year. Additionally, weekly options, offering precise hedges against macroeconomic events, now account for over 20% of total silver options volume. Mike Maloney emphasizes that momentum traders will enter the market as silver prices climb, further fueling the rally. He believes we could be on the verge of a historic breakout, pointing to the rapid depletion of available silver supply. Nearly a third of it has been depleted in just 2.5 months. Now, let's redirect our attention to a video.
Yeah, so I just need to explain this once again to everybody. So what happens here when you sell short? Your broker goes into somebody's account that has a margin-enabled trading account where they've agreed that the broker can borrow their shares without telling them. So they borrow their shares. You think that if you went long silver in an ETF, you think you own ounces that back that ETF. And it caused the entire stock market to crash as one stock shot for the moon. The whole rest of the market crashed so that everybody could get liquid. Well, here we have a potential short squeeze of epic proportions. This increase is all people that are betting that silver will go down. But if it continues going up, they have greater and greater and greater losses. And like I've been saying for many, many years now, silver is destined for triple digits. And as the price goes up, some of these people capitulate. They give in. They go, okay, I can't take any more losses. They close their position at a huge loss. But when they close their position, they have to buy the silver back in the open market. And that causes the price to rise. And when the price rises, the other people that are short then get squeezed even more. So they're hurting even more. And then when one of them capitulates, and as those shorts are covering their positions and it causes the price to rise, all the people that chase momentum start jumping in. And that's how the price shoots for the moon. We are potentially on the verge of this enormous breakout. You did some research just before this, and we discovered that free floating is the same as the registered category at COMEX. It is so this is the silver that is available for sale. This is, if you're trying to buy some, it's just this silver. And a third of it has been depleted in 2.5 months. This is just amazing. And we are set up for an absolute explosion. This is the dislocation that was in that previous article. Things are getting set up to where the only resolution is price.
Silver is gaining momentum, driven by strong industrial demand, a significant supply deficit, and ongoing global uncertainty. Given these factors, many experts anticipate further upside for the precious metal, which is crucial in the energy transition and various industrial applications. Looking ahead to 2025, the outlook for silver remains bullish, with most forecasts pointing to substantial price appreciation. The convergence of rising industrial consumption, particularly in green technologies, and potential supply constraints creates a compelling case for higher silver prices. With predictions of a large supply deficit, how high do you see silver prices going by 2025? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.